And so, Adelaide, what's your analysis of how the property market has been impacted by these rates? We've seen some new data out around this over the last couple of days. It's interesting, isn't it, to see how that does seem to play out differently depending on where you live as well.
Yes, absolutely. So we have seen some moderation in housing prices over the last month, but housing prices are still going really strong, annualising at almost 10% per year. So in July, housing prices went down to 0.7%. They were down to 0.9% in Sydney, but that was the weakest result of the year. We're still seeing a huge amount of demand for housing because even though interest rates are higher, the number of people coming into Australia, the number of people who live here over time is growing really, really quickly. The number of homes that are available in Australia is not growing as quickly. And although building approvals are off their low, which is a really, really encouraging sign, we're still seeing that demand is not being kept up with by supply on housing.
And Adelaide, for those people who have mortgages, who have been copping these rate rises, how are they coping broadly? I mean, we keep hearing about this very scary sounding mortgage cliff that people are going to be falling off. How is that all looking now?
Yeah, so we're actually around halfway through the mortgage cliff in Australia. Around half the people who were on fixed rates have already rolled off. We've got another 6 months or so where we see a huge amount of people continue to roll off those fixed rates. And then next year, it's really just the very, very last lucky group who have those longer term fixed rates. So far, that hasn't really translated into a long or a widespread issue in housing. Now, when I say issue, what I mean is we're not seeing any evidence of forced selling. We're not seeing much evidence of long-term arrears, so people aren't necessarily very behind on their mortgages. We know that 60% of people with fixed rates actually had a year or more in mortgage payments sitting in either cash or shares. So what that means is for most people coming off their fixed rates, they've got the savings behind them to actually keep going with those payments, even if their wages and their salaries are not necessarily keeping up with the cost of living and those interest payments. It's going to cause pain to some people, of course, but it's not going to be a widespread problem. And when I say pain, I'm talking about getting behind on arrears, not being able to pay for the essentials. There's going to be a lot of people who feel that mild to moderate pain of not being able to have the same lifestyle that we could have before. And that's something that we're seeing really widespread through the economy.